Thank you for joining us today. We're going to go through another quick video here about jumbo loans in West Palm Beach and what home buyers will need to know. Buyers that have questions, of course, can reach out to us 7 days a week by calling 800-962-0677 or visit us at jumbomortgagesource.com. First and foremost, we always want to establish exactly what is a jumbo loan, what categorizes a loan as being a conforming conventional loan, or if it's a jumbo loan. Basically, in Florida, Palm Beach County and most of Florida, the current conforming Fannie Mae loan limits are $726,200. That is for a single one-unit property. The limits do go higher for multi-unit properties, whether it's 2, 3, 4 units. But that's the first thing to establish. So any loan amount that is at $726,200 or below, that would be just a standard conventional conforming loan. Okay, so once the loan goes above that, again, that's when you're in the realm of jumbo financing. And there are, again, in the entire state of Florida, it's all the same except for Monroe County, which is in South Florida. Those loan limits are a little bit higher because it's a high cost area. But again, all of Florida, besides Monroe, would be the same as far as the loan limits. And this is for 2023. And the loan limits, they have increased every year for the last 5 years. So they're pretty high right now. Okay, so we're going to touch on a few of the jumbo loan highlights currently. Again, it's important once we look through these requirements that buyers want to refer back to the website, because we're in a period right now where the market is changing some, and oftentimes when the market's changing, the housing market, lenders and banks tend to adjust their guidelines and requirements and also change. So it's always, again, a good idea just to refer back to the website when we're talking about loan amount limits as far as the loan to value and the loan caps, credit requirements. It's always a good idea just to refer back to the website. But there are currently jumbo loan options that are available up to 95% loan to value. Many piggyback combo loan options like 80-15 or 80-10 loans that are helpful really to break up the mortgage. And the main advantage of that is by keeping your first mortgage at 80% or below, there is no requirement for monthly mortgage insurance or PMI. In addition to that, if you can also keep that primary mortgage at 80% or below, and it's below the conforming loan limit, buyers can also take advantage of the lower conforming loan interest rates, which is always a good thing. So depending on the scenario, though, there is a lot of flexibility for those home buyers that are financing more than 80% loan to value, and we certainly have a lot of options that are available all the way up to 95% currently. We're going to talk about the 95% option first and foremost. The loan amount limits are currently 1.5 to 2 million depending on the county. Credit score requirements generally a 680 or above credit is required for 95% financing. Credit score alone doesn't guarantee, of course, any kind of loan approval, as there are additional requirements that are in place for home buyers that may have had a recent financial hardship, whether that is a bankruptcy or maybe a foreclosure or something in the past. There may be additional waiting times regardless of how high the credit score is when it comes to financial hardships. Loan amounts, once the loan amounts get over about 1.2 million, generally the credit score requirements will go up slightly. The documentation required for all of these programs are standard full income documentation, just the same as any other loan, really any government loan like an FHA loan or any conventional loan. It's all pretty much the same. 2 years, W-2s for those buyers that are regularly employed, and then of course tax returns for 2 years for buyers that are self-employed. The property types include all primary Single family homes, townhomes, and most condominiums, vacation homes, second homes are permitted. Those will generally require at least a 10% down payment. Investment properties, they're also permitted, generally require at least a 20% or greater down payment. And then true construction permanent financing is also permitted with the 10% down payment. But for the 95%, primary residences, uh, basic primary residence, owner occupied, okay, for 95%. Transaction types, of course, are purchases and rate and term refinance. We'll see on the next screen there are cash out refinance options for those buyers that have a little bit more equity. And the available terms are all the common adjustable rate mortgages that we know, like a 3, 5, 7-year adjustable rate mortgage, 10-year adjustable rate mortgage, and then all the common fixed rate options, 15, 30-year fixed, that are all fully amortized. There is no interest-only option available for the 95% financing. And again, combo loan options or piggyback loans are available where you do a primary first mortgage and then a smaller second mortgage, depending on what your purchase price is and your loan to value. And those are available, and again, a great way to avoid having to pay PMI because PMI is awfully expensive, especially on larger loans. It can be hundreds of dollars for larger loans, so we don't want to pay that if possible. On the 90%, generally up to $2 million, buyers' credit score requirements can be a little bit less for buyers that are putting more money down. Obviously, with the greater down payment comes lower risk to the lender or bank, so they can offset that sometimes by allowing slightly lower credit scores with a greater down payment. Documentation, just the same, all complete income and asset documentation, property types, all that's the same. Investment properties, again, are permitted, but those will require 20%, at least 20%. And transaction types include the same, plus cash out refinance. So for buyers that have equity in their homes and want to look to cash out refinance, maybe for a debt consolidation or home renovation, things of that nature, that is permitted. And then all the available loan types are, of course, the terms or adjustable rates and fixed rate loans, and then combo loan options as well, piggyback loans. Documentation and reserve requirements. Okay, again, fully documented loans, 2 years tax returns, W-2s. Obviously, self-employed buyers, most of those will not have a W-2, so it would just be tax returns in their case. And then last 3 months of liquid asset statements, like savings account statements or money market account statements, and last most recent quarterly retirement statement, maybe a 401k or IRA statement that you have. It's important to note, though, here that if a home buyer has sufficient assets in one account that shows their complete down payment, all of their closing costs, and then maybe the reserve requirements, the loans. Some of these loans may require 3, 4, up to 9 months of reserve requirements depending on how high the loan is. And what payment reserves are is after the down payment and closing costs are made, it's how much money, liquid or non-liquid, that the buyer has remaining. So quick example would be is if your mortgage payment is $4,000 a month with your taxes and insurance, everything included. Let's say the program requires 3 months of reserves. So they would want to see in that case that the buyer has 12 months or $12,000 of reserves in a liquid or non-liquid account. Again, after the down payment and the closing costs have been satisfied. And again, if that all happens to be in one account, that's all that's going to be documented. Buyers don't have to pull statements from all their different accounts and do all this. If they show sufficient assets in just one primary account, that is perfectly fine. Some other jumbo loan options that are available is there's for self-employed buyers. Oftentimes, self-employed buyers may have additional difficulties with documenting income, so there are programs available that qualify buyers based on their bank statements, maybe a 12-month or 24-month bank statement deposit history. So there are some options there that are available up to 90% loan to value. Of course, second homes and vacation homes, and then real construction to permanent financing. That is also available. Again, this is true construction permanent financing for home buyers that maybe have property already and they want to find their own contractor and build their own home, maybe on property that they already have or want to purchase. This doesn't apply to home buyers that are maybe going to buy a brand new home in a new spec home community, like a plain unit development, and that home is already built or to be built and sold to you directly by the home builder. In cases like that, it's looked at just the same as any normal transaction. So there will be financing, again, oftentimes available up to 95% in those cases. Home buyers that have questions, please again reach out to us 7 days a week by calling 800-962-0677. Visit us at jumbomortgagesource.com for all the latest requirements. And if you found this video useful, please like and subscribe. Thank you for listening.